Let's talk hybrid funds now. Hybrid funds are basically, as the name suggests, a hybrid of equity and debt. The classification now works based on how much is in equity versus how much is in debt. If the equity allocation is less than 25%, then it's considered a conservative fund because the majority, 75% and above, is invested in debt securities. So this is meant for investors, for example, who are close to retirement or generally have a very low risk profile. As the name suggests, it's conservative, investing mostly in debt, some in equities. Then there's balanced funds and then there's aggressive funds. Balanced funds try to make a balance between equity and debt, 50-50. But they allow some variation on either side, so 40 to 60% in equities and 40 to 60% in debt. And then there's aggressive funds, which are primarily invested in equities with a little bit of debt. So if the allocation to equities is higher than 65%, then it's considered an aggressive fund. Like with equity and debt categories, if you want to allow the fund manager to make the choice for you in terms of how much equity and debt, you can choose a subcategory called dynamic asset allocation or the balanced advantage category. Under this category, the fund names usually have the word balanced advantage or dynamic asset allocation, but they possibly could be called something else as well. There's another type of hybrid fund called multi-asset allocation. In this, there's a minimum of 3 asset classes: equity, debt, and it's usually gold as the third asset class. The classification requirements is that there needs to be a minimum of 10% in each one of these. It could be equally or it could be weighted towards one or the other. Doesn't matter. It needs to have 3.